Hey everybody, this is Reg. Welcome to this episode of Give Yourself Enough Credit. This coffee is on, and what's about to go down now is some good information. Today, we're going to talk about the true cost of a mortgage. All right? A lot of people rent, a lot of people own, a lot of people are aspiring to own. So we're going to look at the true cost beyond the interest rate. When people are buying a home, I don't know about you, but when they talk to mortgage lenders and brokers, they might feel like when they're hearing all the terms and terminologies that it's like they're speaking a different language or dialect or something, which is good if you've gone to school for that. But what about the rest of us, the consumer, the buyer? What do we need to know? Well, I'm just going to share a little insight on that, as best as possible. Look at the APR. APR, many people think it's synonymous with interest. Well, it isn't. APR stands for the annual percentage rate. Now, the APR on a mortgage isn't just the interest. It's also any additional mortgage fees that are paid for up front. And I'll give you an example. I'll give you some examples of what those are. These are your origination fees, your broker fees, and your points. The gist of it is the annual percentage rate helps the borrower to evaluate all of the upfront costs that come with a mortgage. Okay? A lot of people think about just principal and the interest, but there's a lot more to it than that. Okay? Now, some of the other fees that I'll talk to you about with this, I'm going to explain in detail. If you hear the term origination, it makes reference to the process by which a lender works with a borrower to complete a mortgage transaction resulting in a mortgage loan. Basically, whatever they need to do to get to the yes, to get you that loan, okay? And then there's a thing called mortgage points, and I'll explain what those are. This is the interest rate your mortgage lender offers you to either buy or refinance your home, but it's not necessarily the rate that you have to stick with. And I'll explain that in more detail as well. You have two types of points. You've got discount points and you've got origination points. Your discount points is basically prepaid interest that you buy directly from the lender. And here's the thing that it can work to your advantage. It can raise your closing cost, but if you get a reduced interest rate, it can actually lower your mortgage payments. Origination points. These are charges that are used to recover costs of the origination process. These covers things like loan officer compensation, notary fees, any preparation costs, and even inspection fees. That's what's covered under this. All right. Even I advise you, once you find a mortgage lender, have them walk you through the process because not everyone's situation is the same and it's going to be different. Now, the mortgage market oftentimes changes on a daily basis. Now, the rates are better than what they used to be, and who knows how long they will stay that way. But when applying for a mortgage, you have to consider that a lender is going to look at a number of factors. All right? And some of those factors may include your employment, your assets, a down payment, and your credit score. And sometimes, and it's best to try to find a monthly mortgage payment that's going to fit into your budget. And most people are asked to put down 20%, sometimes lower. And I'll go into detail how it benefits someone when they do certain things. But the right amount of a down payment, it'll prevent you from having to get something known as a PMI, or in the real estate industry, it's known as a private mortgage insurance. Okay? And the thing about it is, it's additional insurance, but it adds to your monthly cost. All right? We love acronyms. I know in the military I used to use them and all that good stuff. So here's a key thing to remember. Call it take pity. Principal, interest, taxes, and insurance. Take pity. Get your good credit score and they will take pity on you in a good way. You're probably asking yourself, okay, you went through all this. Now, how does this affect credit? Okay, well, I'm about to tell you that. There are many factors, as I stated before, there are many factors that a lender is going to consider. They're going to consider your employment, they're going to consider your income, they're going to consider your assets, and so many other things. But your credit score is probably going to be one of the most important things they're going to consider. And here's why. Most people with a high credit score, they're going to be able to enjoy the following. They're going to be able to borrow more money more easily than someone with a lower credit score. And when they borrow that money, it's going to cost them less to borrow that money, which means their interest rate is going to be lower than someone with a lower credit score. And the down payment that they're going to be required to pay is going to be significantly less than someone with a lower credit score. Now, if you take all these factors, and so you take the principal of the home, you take the interest of the home, a person with a higher credit score has a higher likelihood to enjoy a lower overall annual percentage rate than someone with a lower credit score. Basically, a person with a higher credit score may be able to enjoy paying lower upfront costs than someone with a lower credit score. This is how one affects the other. Okay, I'm not a loan officer, I'm not a realtor or anything like that. I am an ordinary person, and I try to be a very informed individual. Now, I know plenty of real estate people, realtors, loan officers, brokers, and anything like that, and I invite any of them that in the business that I do, we have a webinar every Monday evening. And within the next couple of days, there'll be an advertisement to go out. We want to get you in on those calls. You want to get qualified brokers. We want to help people improve their scores so they can be qualified buyers. So it helps the borrower and it helps the lender. It works hand in hand. You want people to buy homes. And there are many people that want to buy homes, but they may not know everything they need to know or everything that they need to do. Education and empowerment. This is what this is about. I'm not trying to take the place of the real estate industry. I am just trying to bring things to the forefront from an ordinary person's perspective. Ladies and gentlemen, this is your main man, Reg. I need you to take care of yourself, take care of each other, and remember this. You need to give yourself enough credit. I love you guys. Be safe.